Morning from London, Friday the 17th of October. What do you need to know? Risk off. US and European futures drop as US regional bank stocks are crushed by growing credit concerns. Sabadell shareholders say no to BBVA in a big blow to Chairman Carlos Torres. He's going to be joining us very shortly. And defence stocks in focus and look like they're going to drop sharply. Zelensky arriving in DC for talks with Trump, who now says he'll meet with Putin in Budapest in 2 weeks' time. Valerie.
Well, futures are pointing lower broadly. S&P Futures at down 0.6% as those worries about credit contagion from that regional banking crisis spur. We also saw MSCI Asia Pacific. The handover from Asia was weak as well, down 0.9%. Eurostoxx 50 Futures, the weakest of the three, down over 0.9% this morning. The countdown to the opening trade starts right now.
Good morning. Friday morning. We're not done yet, though. There's a lot to get through before this week is done, and it feels like regional banks are firmly in focus in the United States. Are we getting ahead of ourselves? Are we joining too many dots? Is the market spooked and jumping at shadows at this point? I don't know, but front-end yields are definitely down, and equities are lower on that. I'm going to annoy Valerie Tytel right now. Is bad news bad news?
Well, look, we did have a breakout in front-end yields, so there is some cushion, at least to equities, that there is a speculation that this issue in regional banking could be something that could cause the Fed to cut quicker than expected, or than had been expected 2 days ago. Now, the details of what happened yesterday was had to do with Zion's Bancorp. They had a $50 million charge-off on one of their loans that was related to an investment in distressed commercial real estate in California. We also heard from Western Alliance that they had the same exposure to the borrower. Now, this is interesting for two reasons. One, it's in California. We know that Tricolor, the auto lender that went bankrupt, also extended auto loans to heavily in states like California and Texas that are dealing with issues from Trump's immigration policy. And then, secondly, this just caused a wider slide in the banking market. It wasn't just regional banks that were on a back foot; it was also the Wall Street heavyweights.
So, is it a cockroaches question? You know, Jamie Dimon, I hate that word. I did it myself. Warning that there could be credit issues being systemic. Or is this an excuse in the market to just spew out some of your nerves when there have already been worries about the AI rally?
The problem with the regional banks is that they are the real economy. This is where kind of the banking system meets the real economy. As you and I were discussing before we came on the show, the big Wall Street banks, they're separate beasts. This is where the real economy really comes into focus. But the message we're getting from other parts of the reporting season on the real economy is, all right, look at what Delta had to say about the fact that the consumer's looking good. United had to say similar things. Look at what Walmart has had to say. The consumer looks pretty solid right now. So you're getting really mixed messages. But if there is a problem with lending to the real economy, it's going to come through the regional banks, and the Fed will have no choice but to react.
Yeah, and how does that, in fact, impact the AI trade? I thought it was interesting that NVIDIA was still up 1% yesterday. Oracle was up 3% yesterday. So it did seem to be there was some imperviousness happening, at least when it comes to the tech trade, amidst these credit worries.
This is going to affect European equity markets this morning. We have got futures sharply lower, but you've also got a defence story that looks like it's going to be rippling through into this market as well this morning. Defence stocks, like I'm seeing a list now of names that are going to be sharply lower. Renk was the latest, cooled down by circa 6% this morning.
Rheinmetall on that list as well. It's been a pretty weak week, actually, for the defence stocks. And I wonder if that was already a trend that we were seeing. But the latest is that Trump and Putin have agreed to meet in Budapest within 2 weeks or so. Trump does like a fortnight deadline.
Well, and this was speculation that after he had dealt with the Gaza situation, he was going to move his eye to what's going on in Ukraine. So it does seem like to be that the timeline has moved up in that situation.
Yes, but look how Alaska went. It was pretty humiliating.
Well, in Trump's words, this was setting the table for further meetings.
But could this meeting be another humiliation that sets back the cause of peace in Ukraine? I wonder about the meeting between Zelensky and Trump in the White House today. Obviously, no one wants another Oval Office car crash. But Zelensky wants those Tomahawk missiles, and Trump's been hinting that actually the US needs those for itself. Zelensky wants them to be able to strike deeper into Russia.
Okay.
But look, the market impact, oil. And we've seen oil at a 5-month low because of the expectation that oil's going to flow more.
I think the market impact is defence stocks this morning.
True.
So what are they... If you just look at that in isolation, what is it telling you? is telling you that there may be less business for defence stocks. I would have thought that would be the narrative that you could read into what we're seeing in terms of names like Rheinmetall being down as sharply as they are.
Or do you buy this dip?
Sure, possibly, but the message this morning is what from the market? The peace is more likely? That would certainly seem to be the narrative, wouldn't it?
And it does seem like there is some retrenching, at least when it comes to tariff threats. That could also be something that could impact the European market. We heard from the Trump administration that they're looking at changing this forgiveness for automakers from 3 years to 5 years, excuse me. So giving them more time to adjust to tariffs. We also had an update on some things with Pharma that could also impact Eli Lilly and Novo.
Ozempic costs around $1,000 a month at the moment in the United States, if you want to take it. Okay? That's not insignificant. Trump wants to make it 150. So
trimming the fat.
Well, yeah, so sure. But that's a big drop. I'm surprised that maybe actually you're not seeing the weight loss drugs down more than they are right now in terms of the losses we're seeing in terms of Novo's ADR was down, what, 2-3%?
Yeah, it's looking like it's going to be about 4% down from trade gain.
Yeah, it's a drop, but is it... Does
it ruin their business model?
That's a huge move in terms of the pricing story.
I mean, this is one of the most profitable drugs at the moment.
Yeah, exactly. Anyway, so it looks like we are going to see, those numbers on the screen at the moment I don't fully think reflect the overnight moves that we've been seeing. But it looks like we are going to be looking at a fairly big move when it comes to Novo at the open, but not that big a move, not that big a drop in terms of its stock. So those are the stocks we're going to be watching. We've got defence stocks on the move. You've got some of the pharma stocks on the move this morning. You're going to keep an eye on what is happening with the banking sector. The reason the banking sector is also in focus this morning is because we have resolution to the BBVA Sabadell story. And Critty has taken time off from having time off to bring it to us. It's so nice to see you. What's happening?
Well, Guy, I had to come in for this story. 17 months in the making, a 17 billion euro takeover all-cash offer for Sabadell from BBVA. The threshold they had to meet was 50%, with the optionality of moving that shareholder acceptance rate down to 30%. The CNMV, the Spanish regulator, last night announcing that shareholder acceptance rate 25.47%. That means that this deal is ultimately not going to go through. I want to hear it straight from the man who's been spearheading this effort for the last 17 months. I'm pleased to say BBVA Chairman Carlos Torres Vila joining me here on Bloomberg Television. Carlos, thank you so much for your time. We certainly appreciate it. Let's kick it off by talking about this deal and do a little bit of a post-mortem here. From your perspective, where did this deal go wrong? Did you miscalculate?
Thank you, Critty. It's a pleasure to be back in your show with you. We will have plenty of time to analyze, and we can speculate at this stage about what might have happened. Clearly, the result is not what we expected. It's not the result we wanted, but it's the result that the majority of the shareholders of Sabadell have decided. So we accept it fully, and we move on. And continue to look forward to a bright future. Maybe one thing that might have influenced behavior of the retail shareholder might have been the expectation of a second offer in cash, which was, as I told you last time I was with you, uncertain. And I think what has happened demonstrates that it was indeed uncertain. Also, maybe the passive funds might have not tendered as we had expected. But as I was saying, this is all, at this stage, just hypotheses, and it doesn't really matter much. What matters is the result, the decision by the shareholders of Sabadell. They are the ultimate decision makers. We accept it fully, we move on, and we continue to look ahead.
Carlos, in the last time we spoke, to your point, you also were quite clear that if you couldn't win over the retail shareholder base, at least a shrewd institutional investor base would perhaps see the value of this takeover bid. Now, the Sabadell story is interesting. The retail shareholder base has a long history with Sabadell. But what about the institutional shareholders, some of which you did convert, like the likes of David Martinez, among others? But is there an indication here of what they were reacting to?
Well, as I was saying, it's all at this stage hypotheses that we can make about what might have happened. It doesn't really change the result. So I don't think we should ponder much about the reasons why they did or did not tender. I do believe the institutionals did tender in a large majority, the long-onlys in particular, also the hedge funds and the arbitrageurs, but they weren't of the size that they had been in other deals. for the reasons that this took a long time. And maybe the behavior of retail and also the narratives in the press and in the media around what might have happened with the second offer might have influenced also the passives in terms of their expectation of what might happen, and that might have led to a lower tendering.
Carlos, let's talk about the path forward then for BBVA. One of the key drivers when it comes to BBVA looking at the domestic market in Spain was to perhaps limit or even offset some of the pressure the bank was facing when it comes to their emerging market exposure. Now that Sabadell is off the table, how do you plan on addressing that concern from your shareholders as well as the Spanish government?
Yeah, we have been working over the last few years on many fronts, delivering record results. We have grown our net attributable profit over the past years at a 30% growth rate, annual growth rate over the past 3 years, and including this year, where we continue to grow at a good rate, presenting record results. We have gained market share in all markets, including in Spain. In Spain in particular, we are growing our market share across the different segments. We're growing our loan book as fast as it has grown in a long, long time. It has grown at 6% annual rate in the last 12 months. And what we have been doing is working on our strategic plan. We approved the strategic plan at the beginning of this year. We have presented very ambitious goals for the next 5 years, the next 4 years, 25 to 28. Those, we are already today the bank with the best growth profile in Europe, with the best profitability in Europe, and the ambitious goals we presented, the 22% return on tangible equity, 15% increase, annual increase in tangible book value, and really the net attributable profit of 48 billion. Those maintain BBVA at the lead of the European banking sector in both growth and profitability. One important aspect of our plan going forward is shareholder distributions. So now the lapsing of this takeover bid over Sabadell takes away all restrictions we had on distributions, and our shareholders will see the immediate benefit with an immediate acceleration of shareholder return of capital to shareholders through several means. So on October 31st, the day after we present our third quarter results, we will immediately start the 1 billion euro share buyback that was pending. November 7th, we have the dividend payout for the interim dividend. So that two elements amount to 2.8 billion euro. And then we have decided to put ahead another share buyback program, a sizable new share buyback program, which will happen as soon as we receive the approvals from the ECB.
Yeah. And Carlos, the announcement from yesterday that you just outlined, of course, already being well received by the ADRs, BBVA ADRs, I should mention to our global audience, surging in the U.S. session to the tune of about 7%. So likely something we're likely to see mirrored in the European session today. Carlos, that does give the indication, though, that if a lot of these funds are focused now on buybacks and shareholder returns, there are two questions that investors want to know. One, is M&A still on the table, not only for BBVA, but for banks across Europe? And second, what does that mean for your future as the BBVA chairman?
We after this episode, we close this chapter and we move on, and we continue to look ahead, completely focused on executing our strategic plan. It's a plan which is a growth plan entirely based on organic growth and on returning to our shareholders the excess capital above our capital target of 12%. So the actions I just outlined in terms of the immediate share buyback, the dividend, and the new sizable share buyback program are a testament to that strategy, and we will squarely be focused on that, not on M&A. And regarding my continuity, yes, I have been saying throughout this process that irrespective of what happens, I will be heading the bank as long as shareholders and the board want me to be doing so. I think what matters is the results and the performance of the bank. And if we look back It has been an outstanding return to shareholders ever since I became chairman at the end of 2018. Our shareholders have multiplied their value by 5, which is well ahead of our European peers, which is a 3.3 multiple, or the other Spanish banks, which is also around three times.
Well, Carlos, I hear you. A final question then, just to clarify what I'm hearing. You do intend to stay on then as chairman of BBVA. No resignation in sight, no pressure from the board as it stands?
No, not at all. The board is fully backing the entire management team unanimously. The board has been the one making all decisions throughout this process from the very first decision in a unanimous way also. And as I just said, yes, I will continue. There's no doubt about that.
All right. We look forward to having you back and, of course, walking us through the future of BBVA. Chairman Carlos Torres Vila there talking about the future of the bank after the 17 billion euro takeover bid did not go through for Banco Sabadell. Lizzy.
Well, Critty, thank you so much for bringing us that interview with the man we wanted to hear from on this story this morning. Adamant that he's staying in place. Of course, we're going to keep an eye on the shares at the open. Not exactly clear which way they're going to go. But coming up on the programme, EssilorLuxottica shares are set to get a boost from its partnership with Meta for smart glasses. So we'll also watch that stock at the open. And plus, autos could get a lift from a possible tariff reprieve in the US. So we watch that sector too. But up next, we'll dig into the potential knock-on effects of the rout in US regional banks. And if you've got any questions of your own for our guests, please do send them in to us on IB plus BBTV Go. This is Bloomberg.
Friday morning, good morning. We are 40 minutes away from the equity market open here in Europe. Futures are ugly and we still haven't filled last Friday's gap. Remember last Friday, the tweets, the whole tariff trade, it feels like a lot. I was just genuinely sitting here with Chris Watling trying to remember what caused last Friday. Val reminded me, but it feels like it's a long time ago and my brain is addled. Chief Market Strategist at Longview Economics, Chris Watling, joining us now. So we've got a News Friday story this morning, and that is what is happening with the regional banks in the United States. Should we be worried? Apparently yesterday we saw activity at the lending window at the Fed as well. Apparently that's something that we should be worried about. I'm having memories here of banking crises.
Yes.
Are we there yet?
Well, I mean, I'm not sure we're there, but there's certainly stress in the system, and you can see it in the SOFR spreads, as we were saying beforehand. They've been actually been widening for a couple of months, and it got a bit more serious in the last couple of days. So, yeah, that's indicative. There's clearly a lot of credit problems underlying in the private credit sector. But this market's toppy. I mean, it was ready to go last week, and it's feeling like it wants to go to me.
Okay. So
and down, that is not up. Just to be clear.
Do you know what? Actually, that was the question that I was about to ask you. Which direction? Because in some ways you could argue that what this is going to incentivise is the Fed to cut more. And I thought if the Fed cut more, that would be good for equities.
Well, we've already had the noises out of Jerome Powell, haven't we, about ending QT and all that kind of stuff. But I mean, but the market's got to go down before they, I mean, you're seeing a bit of stress that may encourage it. But no, I think there's a lot of speculation in this market, and you can see it if you look at call option volumes at record highs, way above where they were in 2021. You remember when everyone was punting in this, that, and t'other small cap, and now it's punting in the big caps as well. And interestingly, if you look at the Mag 7, they haven't done a lot for a couple of months. Most of the action is second line. I mean, Broadcom's a big stock. Oracle's a big stock. Yeah. Well, it is now. It wasn't a few months ago. I think the market's looking quite tired, ready for a bit of a shakeout.
Chris, the write-downs of these loans had to do with distressed commercial real estate, especially tied to California. Does that tell you anything about where the direction of this is headed?
Well, I mean, it's interesting, isn't it? We've had these high office vacancy rates for a couple of years now, really, since the banking crisis or post-pandemic. And California is definitely one of the states where it's at its worst, and there are other cities where it's quite high as well. So, yeah, it's an ongoing problem. I've been amazed it hasn't become more of an issue so far. And I think we all need to get out our sort of slide rule and dig deep into these credit funds.
And Chris, you don't need a slide rule.
Yeah, that's okay. Abacus, sorry. And work out what's going on. Yeah, so it is troubling. I think once these things get momentum, until you get intervention, it can be a concern, and investors can flee en masse. So you've got to watch this space, I think.
I found it interesting in the session yesterday, the widening of high-yield credit spreads really wasn't that jarring, given we just had a 13% drop in a regional bank. It seemed like they weren't tying up with each other. And is that telling us something more about the role of private credit in this space now?
I think it's telling you about the different composition of what's in what. And if you think about high yield, a lot of it is the energy sector. You know, a lot of it is sort of more traditional. And so I think there's less overlap than one imagines, and I suspect that's part of it. But look, if the market starts to give back in a meaningful way, spreads will widen. There's no doubt about it. It's part of financial conditions.
Chris, can I get you to put your economist hat on and settle a debate that Valerie and I were having quite vigorously in the break? Scott
I was just an observer.
Right. Well, you could be the ref since Guy won't be. Scott Bessent says that after capex booms, you get employment booms. Is that going to be the case with AI, or is it just going to make everybody lose their jobs? We were joking about abacuses, but is it for real?
After capex booms, you get employment booms. Well, I mean, that's actually often true. You get wealth destruction as well. And I think there's a timing issue there. There's a sequencing and a timing issue. So after a capex boom, at some stage you'll get an employment boom. You might have a bust in the market on the way, as we did in the dot-com. So, and a small recession in 2001.
I think what you're saying is they're both right.
Both brilliant. Both brilliant.
Well, you've got to trust the politicians to reskill people, right?
You have to argue
I don't think you want to trust the politicians.
Exactly.
In some ways, we are seeing activity data hold up okay. At the same time, the labor market looks weak. So how do you explain that? Maybe there are productivity gains going on right now.
I think there's a consumer wealth effect at the top end of the income scale that's holding up the GDP data, along with a lot of extraordinary levels of AI capex. So
is that masking what's happening in the underlying economy?
I think so, yeah. I think the underlying economy is pretty soft. I mean, the bottom 50%, 75%, I think, are struggling.
How much do you tie that to the immigration policies of Trump?
I think that's important, but not really the key driver. The key driver is fiscal policies got tight this year, and monetary policy is already tight. And actually, all the pandemic housing states that did well in the pandemic are now rolling over. Florida house prices are 6% off their peak. Texas has topped out. There's some housing busts brewing in certain states, on top of the fact that housing's done nothing for 4 years. So there are large parts of the economy under a lot of stress.
I haven't talked about the UK yet.
Exactly, that's where I want to go. Chris, can I talk to you about how we've got all these raised bets for cuts from the BOE next year off the jobs data this week? You've got inflation at 3.8%. Have we just abandoned the single mandate here in the BOE?
Well, I think, I mean, I'm going to throw in the dangerous word. I think it's transient. So
the T word.
But no, I think there's the national insurance employers hike has added to a bit of service sector inflation. You can see it in the restaurants and that sort of space. No, I mean, I thought it was a great data point this week, 4.2% underlying wage inflation, and I think people are too bearish on the UK.
You don't think there are more tax rises coming in this budget?
Well, there's a few of those. That's obviously not a positive. But I'm not saying it's all good. But actually, it depends how the tax rises come through. If they tax consumption, actually that encourages the Bank of England to cut more. I know she's sort of bound and got all these different rules that she can and can't do that and this and that, but I think she needs to break some of those.
Rules are there to be broken.
Exactly.
All right. Chris, good to have you. As always, I wonder if Rachel Reeves was listening to that. Our global chief economist and chief market strategist, Chris Watling at Longview Economics. And Bloomberg's Lisa Abramovich, as I say, is going to be speaking to the Chancellor at the IMF meeting in Washington at 5:40 p.m. London time, so don't miss that.
Well, coming up, markets priced in just slightly more than 2 25 basis point rate cuts from the Fed before year end. We'll see how that's impacting the dollar and broader FX markets next with SocGen's Kit Jukes. This is Bloomberg.
Minutes ago until the equity markets open here in Europe, and I have to say it's looking pretty ugly. DAX futures are down really sharply. Eurostoxx 50 futures are down by circa 1%. US futures, despite even what we saw yesterday, are down as well. We've still got another 0.5%. Looks like it's going to be knocked off the S&P this morning. So an ugly start for equities. Bad news is bad news? I'm going to say that a lot today.
Well, as a mark of just this concern about the US regional banks, we have seen Treasury yields lower. The 2-year yield, of course, at its lowest since 2022. The 10-year below 4%. And when you look at the European bond space, we've got yields lower across the curve as well. The 10-year German Bund yield lower 3 basis points at 2.54 there. And so we're seeing this globally at the moment, Val.
Well, Federal Reserve Governor Christopher Waller says officials can keep lowering interest rates in quarter percentage point increments to support a faltering labor market amid economic uncertainty. But he warned against getting it wrong.
You don't want to make a mistake. So the way to avoid that is to go, cautiously or carefully and do 25, wait and see what happens, and then you can get a better idea of what to do.
Joining us now is Kit Jukes, Chief FX Strategist at SocGen. Kit, it's been the worst week for the Bloomberg Dollar Spot Index since mid-July. Have you rethought any of your positions at the moment?
No, I think it's still fairly hard work sort of getting it, how far we'll go. I still think the U.S. economy is slowing. I think that what happened was when we stopped getting data, people stopped pricing in more slowing, or people who wanted to hedge equities thought, well, why would I hedge the FX exposure when I've got no new news? Now they've got one piece of news. Fed governors think this is still slowing, and they're still going to cut rates. So that puts us back in a range for the dollar generally. And then we're all going to watch the private credit market, and we're going to see more significantly if the private credit market ever at any point starts feeding through to the public credit market. And then for the sake of argument, we're going to try to work out how much of your cappuccino this morning was froth and how much was caffeine.
So can I just point out, Kit Jukes sat down and went, I haven't had enough coffee this morning. So the fact that this is what's on your mind tells me an awful lot about the level of caffeination.
so in that sense, we're going to take a little bit of the froth out of some of the moves in some of the equity indices and in the credit market, and we'll see. And if it's a tiny correction, then we're going to be very range bound. And
what's a tiny correction in your mind?
Yeah,
a tiny correction in my mind is an equity market that goes down enough not to change anybody's view of macro fundamentals, and which in my world. I don't make another new high. I don't get Eurodollar up through 120 on the back of that. I just turn around and say, yep, my low was above 115. My high will be below 120, and we're going to wait for some real economic data.
Well, how could a risk-off move affect the funding currencies that we've seen do really well this week? Dollar Swiss, the yen, for example, even the euro doing quite well.
The yen has obviously been the first one to get a lift this morning. I think that's more because it's the one people are most short of, not just as a funding currency, but people have been selling the yen into Japanese politics. I would not be short of the Swiss franc. If you paid me to be short of the Swiss franc at this point in time. They've been intervening to stop the thing rallying against the euro, and everybody's saying this is really stable. I don't think the Swiss franc stopped being the world's safest currency. And so if people are short of it, I think they'll be sort of running to get out of those things quite soon if this goes any further.
Do you buy the idea that Takeover would accept a weaker yen if she's meant to be the Iron Lady?
She was part of Abe's team, and they wanted one. The difference is, obviously, when dollar yen was 80 and they wanted it to weaken, isn't the same thing as 150 and wanting it to weaken. But she hasn't said anything to push back on that at any point, to be fair.
The other thing I wanted to ask you about is we've had guests on all week from London Metals Week, and we've been talking about the debasement trade. You're kind of on the other side of it. I wonder if you believe in it, what it means to you when people are saying that gold is the new dollar.
Well, look, I think that the weaponization politically of the dollar has encouraged a bunch of countries to think we'd rather have something else to have our money in. And I think that's so weaponization, politicization of the dollar. So it's changed its status. And the thing about particularly gold is that, there's not that much of it. And once people start wanting it, there's no clever way to say where the top is. I don't think we've killed the idea of the way the currency market works or the currency system. The dollar can come back. But it ought to be at least a decent-sized warning to American politicians that you actually have to respect the fact that if you want to be the world's safe haven currency, you can't use it politically.
Kit, I've got a present for you. I know you've mentioned it a couple of times. We've got a coffee for you.
See, my day is complete.
We treat you well here at Bloomberg.
Hang on a sec.
By the
Coffee
lovely Tara.
coming. There we go.
Thank you.
So my question now is, how much froth is in there?
See, you can't tell when you look at the top. That's
Okay.
you've got to drink it to find out.
Absolute genius. You got to take the lid off before you even figure out what's going on. Okay, let's talk. Okay, so gold. In all seriousness, what message are you taking away from the gold trade right now? Is it just a speculative asset, or is there... People are trying to put kind of structural underpinnings to what is happening here.
OK, the first message I take is that people know that the dollar's gone up too far, but they don't like any other currency. In other words, they don't like the yen because the Japanese government doesn't seem... I'm not sure if they like the yen, even though it's cheap. They don't like the euro because we don't have any growth. I mean, it's the same as... They know the US equity market's high, but where would you take your money out and put it into?
Yeah.
So people are trying to get out of dollars to some degree, and they're looking to, well, I'll have this stuff. Or rates are pretty low everywhere. I mean, you could turn around and say the only currencies that are really, really doing well are either the kind of ones with a growth story, Norway, Sweden, or the ones with some yields, Brazil, Mexico.
So there isn't this kind of... What I'm also hearing is this kind of prepper argument, kind of when the world goes to hell in a handbasket, which it's going to because of debt levels, you want gold because there's no counterparty risk in gold. You could just own it, and when all hell breaks loose, that is what you're going to want to hold, rather than anything else that is a related fiat currency asset.
Yeah, it's an argument. I don't know how many people are really being convinced by that argument, in the sense that if the first big buying seemed to come from China, and it was central banks deciding to, I'm not sure I want treasuries, I'd rather have gold, and that big flow started happening. And the rest of us have been getting on the bandwagon, I think partly because, for a bunch of reasons, but I don't think that we've reached a point where suddenly we've all looked at the world and think, yeah, the American administration has made us lose confidence in the world's most important currency. I'm just going to, grow potatoes or something.
Well, the role of the world's most liquid currency is also in funding markets as well. And we did have a spike higher in SOFR yesterday, the overnight financing rate. Are you reading anything into that?
I'm finding that everything that's happening with the front end of the money markets is going to require me to spend at least a whole weekend catching up to make sure I know where I am at the moment. My colleagues in the States, but seriously, we're changing the very bottom end of what we count as money, and we're getting some volatility. But we've had more volatility in SOFR now in the last kind of year than, it's all picked up. There's big changes in those markets. So we're not as alarmed as we were, say, in 2020 when they went nuts. But yeah, they're telling us something.
Where you mentioned about the euro maybe not being an alternative to the dollar, of course, we've had Le Cornu surviving those two confidence votes this week. Are you at least a bit more confident on the euro since the start of the week, or does the French politics not really matter?
No, it matters if the Bundo AT spread tightens in by 50 basis points. It'll definitely be, because that'll correlate with the currency fairly neatly. But I don't know that ditching on absolutely necessary pension reform and sort of saying we can't deal with that during this presidency, effectively. For now we're done on that. I don't think that's solving Europe's problems. So it's a bit one of, this takes away the negative news, but if what you wanted was a coordinated fiscal push in Europe on defence stuff, the French side of that is still very limited. What they're not doing is tightening fiscal policy through fiscal reform.
Bit of a sticking plaster then.
You see the ECB cutting rates again?
Yeah, eventually I do, actually, yes, next year.
Next year?
Because inflation's going to come down so much.
Right.
Eventually. And that's the, I think what they're saying now is we look like we're at neutral, it's neutral, we're all neutral. And you sit there and you look at kind of the trend in prices coming down from a higher level to a low enough level where you cut rates.
And that's internally generated disinflation or Chinese generated disinflation?
Both. I mean, there is, global trade is disinflationary for the people who have had tariffs imposed on them, certainly, because either you're selling less stuff abroad.
Does that imply they're inflationary for those that are imposing them?
At the first instance, absolutely. Always.
Okay. Harlequins Exeter this weekend?
We've had some decent results down in the southwest. They're looking better. I'm more optimistic than I would have been this time last year.
I suggest you do that rather than focus on what is happening in the funding market. Kit, nice to see you. We'll make sure that Kit is fully caffeinated. Kit Jukes, looking at the froth in the market and in his coffee, Chief FX Strategist at SocGen. Thank you very much indeed. Coming up, shareholders reject BBVA's bid for Sabadell. The chairman telling Bloomberg, telling Kriti that he accepts the decision.
We will have plenty of time to analyze, and we can speculate at this stage about what might have happened. Clearly, the result is not what we expected. It's not the result we wanted, but it's the result that the majority of the shareholders of Sabadell have decided. So we accept it fully, and we move on.
I'm pretty confident that we are close to our target, and this is good news. So I'm not so concerned that maybe we might undershoot inflation for a long time.
There is an empirical correlation between higher inflation and lack of or loss of central bank independence. So that is something that we have to take into account in our decision making.
Nuggle and Wren speaking to Bloomberg as we watch what happens next with the central banking story here in Europe. Clearly there is a sense at the moment that all is good, or at least all is in the right place. But as we've just been hearing from Kit Jukes, maybe the disinflationary trend will change that narrative. What is definitely changing the narrative this Friday is what is happening with the US regional bank story and, by extension, the wider credit markets in the States. Big drops yesterday. Do they continue today? Val's got more.
Look, big drops yesterday in regional banks, and we essentially closed at the lows in some of these single names. It all started with Zions. They announced a $50 million write-down when it comes to some of their loans that were extended into distressed commercial real estate. Western Alliance then came out saying that they had exposure to that same lender, but we also saw the broader banking industry on the back foot. So it wasn't just the regional names. The broader Wall Street names were also down, with the KBW Bank Index down 3.6%. Now, it was very interesting to see, at least when it comes to the market reaction off the back of this, what kind of things broke out from their recent trends. Gold was an obvious one yesterday, flying again to new record highs, but also the front end. We are seeing the front end break lower in yields continually since last Friday. We're now down 20 basis points since that slide from last Friday, as the market starts to tempt an outsized 50 basis point rate cut between now and year end. So definitely the front end has been on fire and given a lot of juice from this. Also, watch out for the funding markets. We did see some spread widening when it comes to some front end basis trades. That's also impacting the Treasury market. But we are also keen to see its broader impact on the tech trade, on the S&P 500, as we're battling to make up that gap from Friday. We've gotten a lot far from it now, with the S&P 500 closing in the red yesterday. That gap from Friday has now gone to 2.4%, so still a lot of room to make up. But I thought it was interesting, Guy and Lizzy, that it seemed like tech was a bit impervious to this. We saw the names of NVIDIA and Oracle closing in the green yesterday.
All right, well, that's what's happened so far. Let's get the view on what might happen next. We can bring in Bloomberg's executive editor for Asia markets, Paul Dobson. Paul, is there more pain to come from this concern about the US regional banks?
Yeah, good morning. It certainly seems to me that, in terms of both timing and trends, that's what's got the market so worried right now. What do I mean? Well, in terms of timing, we had the two much bigger credit blow-ups in quick succession, First Brands and Tricolor in the US, and that raised the sort of concern about bad lending standards and untrustworthy kind of borrowers as well. And you heard Jamie Dimon this week talking about the idea that there may be more cockroaches. What he means, more bad news to come, more other people hiding similar situations. And lo and behold, out comes some more regional banks with similar sorts of tales on a much, much smaller scale. It's worth emphasizing. But nonetheless, what it does is it has people questioning again the value of the collateral. Are people really, paying due attention to the loans that they're making here? And what does it tell us about the state of the US economy as well? And so that, I think, is why people are rankled. That and memories of 2.5 years ago when we had the Silicon Valley Bank and other smaller regional banks in the US suffering struggles as well, and how that fed back into the rest of the financial system. So that's why I think people are worried, and it tends to breed on itself as well. So people get angsty, and then they start to put the narrative together. They say gold is rising because of mistrust in the US financial system, not just, you know, central bank demand or whatever else it is. Treasury yields going down, Fed's going to have to cut more aggressively. Look at money market rates and stuff like that, and so it can build on itself quite quickly. So that's the risk scenario. A little bit of action from the central bank maybe would calm nerves. A few more good news results from regional banks would assure people quite quickly as well, maybe, though.
Yeah, we've just been checking. Val tells me there's more regional banks coming today, so we'll watch out for those a little bit later on. Gold does continue to climb, though, Paul. I got it up again this morning, so it does seem, it at least seems, reasonably impervious to all of this.
You can't tell whether people want gold for a haven or people want gold because they want gold. I mean, so just think about it, though, Guy. It's just like a frenzy at the moment. You know, you log on to Twitter and you don't see the gold bugs talking about gold on their own anymore. You see Mohamed El-Arian, you see Ray Dalio discussing it. You know, what are the reasons for it? Each opinion columnist has a view on what's driving it as well. You look at the photos that are accompanying it. People are tweeting queues of retail investors, you know, down the street from Sydney and Hong Kong and, you know, kind of Vietnam in our region, in London. Everybody's interested in doing trading on a retail basis, and that's keeping that momentum going. You've got Diwali in the Asia region as well, with Indian people wanting to buy more jewellery and not being price sensitive, rather wanting to buy now in case the price continues to go up. We've seen a Japanese retail bank running out of gold bars to sell to people. So, you know, that kind of fervour and frenzy just keeps on going and feeding on itself again at the moment, and that's why gold is on that continual uptrend at these moments.
All right, Bloomberg's executive editor for Asia markets, Paul Dobson, thank you. Now let's get our stocks to watch ahead of the European Cash Equity Open with Chloe Melly. Chloe?
Good morning, Valerie. After a takeover saga that lasted 17 months, BBVA's bid for Sabadell has officially failed. So this is obviously quite a big setback for BBVA chairman Carlos Torres, who'd already tried to buy Sabadell back in 2020 and failed then as well. And it seems that he once again kind of miscalculated the attractiveness of that offer. Analysts are saying, though, that this is actually quite the relief, that this really allows those companies to move on and focus on their standalone prospects, remove that uncertainty that was created by this M&A pursuit. So we'll be keeping an eye on that this morning. Moving on to EssilorLuxottica, the eyewear maker has posted really strong sales growth thanks to really solid demand for its AI glasses that it created in partnership with Meta. We've seen a lot of resilience in the shares in that stock over the last few months, thanks in large part to this partnership with Meta. So we'll be keeping an eye on that today. Analysts are saying that this really eases the concerns around the quite ambitious margin target that EssilorLuxottica had shared with the market. So this is really going to be something to look out for. It seems that this AI bet is paying off for Essilor, so something to be keeping an eye on going forward as well. And finally, let's move on to Volvo. The truck maker said that the slowdown that they had seen in North America will continue into next year because of continued tariff uncertainty. So Donald Trump's tariffs on medium and heavy-duty trucks, 25% tariffs will be applying from November the 1st, so in just a couple of weeks. And so this tariff uncertainty has been weighing on Volvo, but also two of its closest peers, which are Daimler Truck and Traton. We can see this weakness here, and that will probably continue as at the open this morning on the back of this quite cautious commentary from Volvo.
All right, Chloe Melly, we thank you so much. And there are loads of other sectors that we should be watching this morning, not least Pharma. Yep. You've got Trump's deal with Merck out of Germany on the fertility drugs.
So some good news.
Yeah, good news on a Friday. Hey. We've also got the Ozempic news and the much lower price for Ozempic that Trump's been touting.
So significantly lower.
Yeah. You said 1,000.
I think so. I read this morning. I think it was $1,000 a month is currently the price that most people pay. Trump's talking about it being reduced down to $150.
Yeah.
Which would, make it a lot cheaper for everybody too, but also would allow it to be used by more people, which again would come back to this issue that there's been around these products, which is volume production, and whether or not you have the capacity. If you lower the price by that much, presumably the demand's going to increase dramatically.
Well, it's like Botox and filler. Everyone will be at it.
So should we short McDonald's stocks this morning also?
Yeah, so Novo looking to fall about 4% if you look at Tradegate. But there are loads of other sectors to watch as well.
Defence stocks, keep an eye on defence stocks. I think defence looks like it's going to be a loser in Europe this morning. It's had a massive run, obviously, so far this year. It's interesting that Zelensky is in the United States. He's been meeting with some of the big defence companies as well, which I think is a really interesting relationship. He's talking to Raytheon, he's talking to Lockheed Martin. So in some ways, he needs things from them. They are going to produce the kit that he is going to be using on the battlefield, and aligning that kind of level of interest is something that I suspect he wants to do. But I suspect they also want to learn from him. Here is a country with a live battlefield in which you are learning an awful lot about how kit functions. And they will be wanting that. They'll also be wanting to develop relationships, so I suspect, with Ukrainian defence companies, that if there is peace, you can see a huge wave of consolidation in terms of big US defence companies, European defence companies going in and buying Ukrainian know-how in terms of what they've learnt on the battlefield over the last few years.
Yeah, I'd only add to that it's the same story with Israel. So much innovation there that you need here in the UK and you need in the US when it comes to the defence sectors as well. We should kind of look back on the week of earnings that it has been, because it's been a pretty great week when it comes to Nestle or LVMH or ASML, all up about 10% so far this week.
Nestle feels like it was up, though, on a kind of streamlining process. It cut, 16,000 jobs going to be cut?
Yeah. But I wonder whether the estimates have been too low going into this earnings season, and therefore everyone's been a bit too easily impressed.
Yeah, go.
Look, aside from this, I think, eye is also going to be on the macro. How are European banks going to perform after these jitters in the U.S. regionals, or is that something that is completely separate when it comes to worries about the credit sphere? I'm also going to be watching how the VIX reacts. We are seeing VIX futures rise. I mean, we did see the VIX index spiking to 25 in the session yesterday, one of its biggest jumps in quite a while, and we're at year-to-date highs almost essentially since April.
Friday morning. Still quite a long way to go, though. Kind of sometimes on a Friday morning you feel like the week's already over. I don't think that's going to be the case necessarily this Friday. I think there's a lot we need to factor into our thinking. So European equities finished at session highs yesterday. And then we started to worry about regional banks in the United States. And as a result of which, we declined pretty rapidly in the US session. We've got to price that in, plus also the fears that actually this has got further to run. And I think that's what we're also factoring into the futures this morning. Plus there's a kind of defence story, plus there's a pharma story that needs to be priced into European equities as well, Val. There's a lot going on.
A lot going on. It does seem like there is broad weakness across a few sectors that you named there, and futures are pointing to quite an ugly open. Euro Stoxx 50 futures down 1.3%. FTSE 100 in the UK here down 1.2%. DAX futures, the key underperformer this morning, down 1.6%. Lizzy, I think that tells us something about the defense trade this morning.
Yeah, well, I want to take us to defense first then, because we have Trump and Putin set to meet over the next 2 weeks or so in Budapest to discuss ending the war in Ukraine. Zelensky going to the White House today, so we keep an eye on the defence sector. It looks like we're going to see losses for the likes of Rheinmetall. It's pretty chunky ones, actually. Also in autos, we've got positive news today. A scoop from Bloomberg that the White House is set to ease tariffs on US autos. That agreement could come as soon as today, so mind them. And finally, Pharma. We've seen Novo, Nordisk, ADRs falling in late trading because Trump says the price of Ozempic could come down really, really significantly. Novo shares down on Tradegate. So, Guy, we keep an eye on Pharma broadly as a sector.
So there's a lot to fold in this Friday morning as we think about how these European markets are going to open. We are watching what looks like a negative start to the day, as Val points out as well. Keep an eye on the volatility trade around all of this. So here we go. Let's put some numbers to this story and figure out what we are anticipating. FTSE 100, we'll see what the drop looks like there in a couple of minutes, but we've already got an early drop coming through from the Spanish market, which has also got to factor in the BBVA Sabadell story, which we'll come back to in just a moment as well. So that market is down by 1.3%. The Stock 600 is down by 4.5%. We need to wait for the CAC to open, or we need to wait for the DAX to open before we think we get a really clear picture on what is happening there. The FTSE is now down by over 1% and dropping as we start to see more stocks opening. The IBEX is reasonably static, down by 1.25%. You've got a similar story now in terms of the numbers you're seeing on the FTSE 100. Could take a while to get the DAX open this morning. I wonder if it'll take even longer to get the Swiss market open. The CAC, we'll see what happens news there, but we are expecting some of the European pharma stocks to be under pressure. So there's a lot going on, a lot to fold in. So let's get into the nitty-gritty of what is happening here. Sectors, single stocks. Val, what are you seeing?
Well, we have all sectors currently opening up in the red. No surprise at the bottom of the basket is the banking sector, down over 2%. We are seeing weakness in Banco Santander, down 4%, but also the likes of HSBC, Barclays, Unicredit also dragging down the index, also BNP. So it does seem like there is some broad weakness across the banking sector, and this follows on from the regional bank hiccup yesterday in the U.S. market, some concerns around credit and collateral. Also at the bottom of the basket, we are seeing a technology and auto parts. So there is some negative read-through, actually, from what we heard out of Washington when it comes to a longer reprieve for those looking for exemptions on auto tariffs out of the U.S. The likes of Stellantis down near 3%, Renault down 2.5%, but is a fairly negative session this morning. We have 480 stocks in the red, only 46 in the green.
Yeah, about three-quarters of the way down the basket, you've got industrial goods and services, so down 1.1%. And that comes down to defence mostly. A lot of the defence names, all of them in the red, obviously. Yeah. We're waiting for Rheinmetall, I think, but we've got Saab down 2%, Leonardo down 2.8%, off, of course, this news of Trump and Putin meeting to end the war in Ukraine.
But that's the way the losses are coming through from. In terms of the points hit, tech is down pretty hard, which is interesting because tech didn't get hit that hard yesterday, but ASML is down by 2.3%. But Novo is the second biggest points drop on the market this morning. It is down by 4.2%. The Spanish banks, European banks more broadly, are down pretty hard. Santander is down by 4.7%. HSBC, more Asia exposure, only down by 2%, but I think I saw Barclays is down by 5.1%. Unicredit's down pretty sharply as well. So you're seeing some losses coming through. SAP is now down pretty hard as well, down by 2%. In terms of the biggest points drops this morning, it's ASML, Novo, Santander, and SAP. So you've got banks, technology and pharma really doing the damage to the European markets on the downside.
And let me add some fixed income context to this. We are seeing high yield spreads widen by around 7 basis points when it comes to the CDX crossover. So maybe that is explaining the broad weakness across the banking sector. But I, for one, am very surprised at the pervasive weakness across the banking sector. It's not just Sabadell and Santander on the back of their deal falling apart, but also the likes of Barclays and Deutsche Bank dragging down the index.
There's an anomaly. There's one stock that stands out in the banking sector that is sharply to the upside this morning, and that is BBVA. So BBVA is up by 7.4% this morning after we've seen Sabadell shareholders rejecting that offer. So maybe actually BBVA shareholders are pretty happy that that offer, you could argue, has been rejected, judging by what we're seeing in terms of the market action this morning.
Yeah, I just I'm looking at Volvo Truck because they got their results out as well this morning, and those shares are down 6.5% at the moment. Just trying to find what their what the top line of their results was, but we are going to be having a hit on that later on in the programme. It seems to have really knocked that stock this morning. But
North American weakness lasting into 2026 on tariffs. Maybe the reason for that.
There you go. Well, let's get some analysis on all of this. US banks, tariffs, a lot of it. We can speak to DWS Global Equities Senior Portfolio Manager Madeline Ronner, who's in our Frankfurt studio. Good morning to you, Madeline. Thank you so much for making time. It looks like this market is worried about cockroaches in credit. Are you?
I mean, it's definitely a watch item, especially because it seems that more and more one-off situations are starting to accumulate. So, but I think we will get more color as we get more into the earnings season. We will hear from the big banks. We will hear from more regional banks. So I think that has the potential to ease concerns again. And especially as we get more and more also good other signs from the US real economy, I think that's also encouraging and kind of is a little bit of a let's see what data is the most relevant here. But it is definitely something to watch and not something that you just should go over.
I mean, every day we ask whether you should buy dips. I wonder, given the dip buying that we have seen since last Friday on certain days, is the market too complacent that Trump is going to chicken out when it comes to tariffs?
So we're actually also of the view that what we're currently seeing is a little bit of posturing from both sides, from the US as well as from China, to see, okay, who has the stronger negotiation power. We strongly believe that the tensions will remain and we will not get into a state where everything is just completely off the table, but we will have these tensions flare up again here and there. So obviously you have to watch it. The markets are obviously on very high valuation levels, so there is little room for error or something escalating. But we think it will actually, there will be concessions again, and we will find some kind of a deal also with regards to the rare earth thematic. So we think actually in October it could be that stock steps further as these negotiations goes on. Also, if especially in Europe on the defense thematic, if we go into negotiations with Ukraine. However, we still think that given the good earnings momentum that we're seeing, obviously driven by AI, and we had it also the start of the earnings season with ASML, with TSMC, they were really good cross rates for the AI trade, and we hear good commentary from that again. So we think that that has the potential to basically lead to a stronger rally into year end again.
Well, just as you're speaking, we are watching the DAX now fall over 2% as we speak. The CAC in France down 1.3%, the FTSE 100 down 1.5%, and the broad Euro Stoxx 600 index down 1.4%. Madeline, I read that you are expecting a strong finish to the year, especially when it comes to your view on U.S. equities. What, in your mind, is the key risk to that view?
The key risk would be if we don't get a settlement between the US and China, and that escalates, of course. So I think that's the key risk. And as I mentioned, like the high valuations that we see is kind of the reason why we see this higher volatility, and where also the downside risk is more extreme. So we don't see high valuations as a reason to sell, and that has proven over and over again this year in the market. But it is, if something goes wrong, obviously the downside is much larger, and investors should be aware of that. So I think that's one key point to watch. I also think, especially if you think within Germany for the DAX, I think that some of the defense orders come through, because that is also one of the reasons why kind of the DAX was fading a little bit, and the enthusiasm also, especially from investors abroad, was fading a bit because there were worries about like the stimulus package being delayed. However, we were always of the view that we will see the money start to flow in defense in Q4 this year, and for infrastructure more this year, and that should be supportive for GDP growth next year. And that is still supported in our view, and that's a watch item.
Madeline, as you mentioned, you do prefer German stocks over their wider European counterparts. What's your view on the France situation? We've covered a lot when it comes to the volatility in politics there. How are you viewing French assets?
So as you mentioned, so we prefer Europe overall. So we do like also French stocks. However, we still prefer Germany over France and UK stocks at the moment, especially as this political volatility goes on. But there is a certain amount of risk premium also priced into French equity markets, for example, that we don't have in German stocks as much. So it's a little bit stock by stock basis. You have a lot of international stocks as well that we really like from a business model perspective. So that's something where you have to differentiate a little bit between the French stocks within the index.
Just in terms of the mix that we're seeing, in terms of the downside, Novo, ASML, SAB, Banco Santander, all down hard, all dragging European equity markets lower. The DAX is down pretty hard. The Stoxx 600 just bouncing off session lows right now. Madeline, what is the relationship between European stocks and US stocks right now? What is the beta between the two? Are European stocks going to be a diversifier still? Are they going to work as a diversifier going forward from here into year end?
It will be very interesting to see what the US markets do today, because it has worked really well to be a diversifier, and we actually saw a lot of days where Europe was even protective on the downside, so it fell less than the US, which obviously in a longer term horizon you wouldn't expect, and you would expect Europe to have a higher beta. So it will be interesting to see if that dynamic changes now, especially if we go through earnings season and we again see stronger earnings growth in the US than in Europe. However, again, like as this earnings season has started to shape up, we actually have seen some pretty solid results. I mean, expectations have been low too, but still, I would count that as a positive. So we generally expect Europe to work as a diversifier, and also has the potential to be protective on the downside because simply the valuation discount that it has. So there's much more risk premium priced into Europe versus the US. But yeah, let's see how it shapes out, especially because defense obviously is now more impacting Europe. I mean, the banking sector in Europe has been a strong performance driver as well and a strong EPS growth driver. So if you look at where the EPS growth in Europe has come from, a lot of that has come from banks. So watching that news flow will also be very important to see how the beta versus the US develops over the next few months.
Is the banking sector a point of vulnerability for Europe now? As you say, it has been a key driver. If we start to see a focus on the banking sector globally because of credit concerns, is that going to undermine the European trade in a meaningful way? I'm assuming it will.
I think it could, yes. So we're still positive on European banks. We think they have the balance sheets are very healthy. We think credit quality itself in Europe looks still pretty solid. But if we see more and more of that popping up, and obviously they're very interconnected, very global, that is a watch item and a point of vulnerability for European markets in itself.
So if we're seeing the likes of Rheinmetall down today, and you like German stocks, Rheinmetall down 4.6%, is this a day to buy stocks like that?
Yes. So in our view, yes. I mean, we would buy the dip, especially because in our view, the investment thesis on European defense and German defense as well is more around the changing relationship of Europe with the US, and the US also demanding Europe to take more responsibility for our own defense after decades of underinvestments, really. So there's really like a huge catch-up needed in order to get more independent in that space. And that is not that dependent on the Ukraine war, as one might think. I also think it's not that an out of consensus view. So a lot of what I read is that investors kind of want to buy the dip. However, one thing to that is if you have so much uncertainty about how the situation will develop, I think investors will be a little bit cautious to step into that trade because you don't know really where the flow will be as long as you don't know how the Ukraine situation develops. Because if you expect that we might see a peace agreement, obviously stocks could dip further and then you might want to step in. So the timing of it gets a little bit difficult. But I think generally the dip is one that you can buy.
Madeline, great to catch up. Thank you very much indeed. Looking at potential dip buying if we see this maybe continuing. Madeline Runner, Global Equities Portfolio Manager at DWS. Pretty ugly out there this morning.
Pretty ugly. If you're just joining us, we are seeing European stocks broadly in the red and continuing to drop as we speak. My eye is actually on Euro Stoxx 50 futures. It's futures that really get hit the hardest out of the gates on a move like this. We have Euro Stoxx 50 futures down 1.5%. The DAX is actually trading at session lows, down over 2%. The CAC down 1.1. FTSE 100 down 1.4. We're also seeing a broad risk-off sentiment across fixed income. We're seeing a bull steepening when it comes to the German curve. Also, continued rally into treasuries. Those two-year yields are down around now 5 basis points. We are seeing credit spreads widen just slightly across Europe, and oil is also at session lows. So this is a broad risk off on the back of this European cash equity open, which has seen the banking sector really underperform so far this morning. It
would be worse if there weren't for two stocks. EssilOrLuxottica is up sharply, as is BBVA. Both of those two are accounting for around 1 point upside. There's 8 points of downside in the stock 600 this morning. So those two stocks are doing quite a lot of heavy lifting and making this actually look better than it maybe actually is. You've got 555 stocks down this morning in the stock 600. There's some fairly significant losses. Let's take a look at what is happening in terms of the core 6 narrative that we are watching this morning. This is the centre of gravity, and as you can see, there's some significant losses out there this morning. ASML, one of the biggest points drops this morning. We are seeing there down 1.4. The biggest points drop on the stock 600 this morning is Novo Nordisk. It is down by 4.5% this morning, 4.6% on the back of what we've heard from Donald Trump. But Schneider is down by a lot as well. LVMH down by a bit, down by circa 1%. Nestle, a safe haven, you could argue, and a big performer this week, down by 0.9%. We're also watching, obviously, the upside. BBVA, that stock, is up by 7.7% this morning. It is the second best points performing stock that we are watching. The press conference is taking place right now. We've already heard on this programme, obviously, from Carlos Torres. Critty was talking to him a little bit earlier, bringing us the news first. But BBVA is up by 7.5%. As they figure out what they're going to do next. M&A apparently is off the table, and the market likes that line. The stock is certainly rising in relief that maybe this is not going ahead, this huge M&A story around Sabadell has not proceeded, will not proceed, and the market appears to like that narrative. Let's get more on what is happening with the single stock story. Here is Chloe Mellet.
Good morning, guys. So apart from BBVA, which is doing really well today, it is red across the board for that European banking sector on the back of that read across from loan problems at two US regional banks. That is really weighing on sentiment across that banking sector in Asia and Europe as well. And it's really kind of creating those concerns around the health of the credit market. So we're seeing that reflected in the shares of Deutsche Bank, Barclays, SocGen, BNP. But those are just a few. All of them really across the European banking sector are down this morning. Moving on to defense, and that is also down and also in the red this morning, with Rheinmetall down 4% on the back of Trump saying that he will meet with Putin in about 2 weeks to try and find a peace deal in Ukraine. The previous meeting did not yield an actual peace deal, but Trump said that he was optimistic that this one would result in a ceasefire, and that is dragging down the shares across that defense sector this morning, BAE and Rheinmetall in particular. Moving on to Essilor, which is rising this morning after posting really strong sales growth. Its AI glasses, they are created in partnership with Meta, are very popular, and that is really driving sales and driving the shares this morning. We are up almost 10% for Essilor. Moving on to Volvo, the truck maker mentioned that the weakness in North America it had seen over the last few months will continue in 2026 because of that tariff uncertainty, and that is dragging down those shares. We are down 4.6% for Volvo this morning. And finally, some positive movement in Continental. The tyre maker said that it outperformed expectations because of cost cuts and then also really strong demand for winter tyres. So that is quite positive, and a reversal from what we saw with Michelin, its closest peer, which cut its outlook earlier this week. So they're two very different stories in that tyre sector, and stock is up almost 5% for Conti.
Well, Chloe, from our equities team, we thank you so much. Chloe Melly, you started with the European banks. Banks at the bottom of the sectoral basket, down 2.4%. But that coming from the US regional banking story, Val, and we're seeing the impact on US futures right now.
Yeah, we're at session lows when it comes to S&P 500 futures. We have taken out now the lows on Tuesday. So since Friday, we have now dropped 2.8%. Really now next eyeing the lows from Friday night to evening session. We're at session lows down 1.2% on S&P futures. And over to the NASDAQ, because yesterday it did seem a bit impervious to this risk-off sentiment. We're down 1.4% on NASDAQ futures. Russell 2000 futures, which are a broad indicator for U.S. domestic growth, those are underperforming even more, down 1.75%. We'll have more on the markets next, plus a few stocks to keep your eye on this morning. This is Bloomberg.
Welcome back. 21 minutes past the hour, 21 minutes into the equity session. It looks ugly out there, doesn't it? We continue to fall. We are seeing a significant drop across Europe. The DAX is definitely taking it on the chin this morning. US futures are near session lows. This time last week, we thought we were okay. We thought the weekend was going to be nice. We thought we were going to be nice and relaxed, but turned out not to be the case. Trump was the catalyst last week. This time round, this weekend could be spoiled by regional banks. We'll see what happens as the rest of the session progresses. But the banking story is firmly in focus as well in Europe for a different reason this morning. BBVA's $19 billion offer for Bank of Sabadell has been rejected by 3/4 of Sabadell shareholders, putting an end to the 17-month takeover saga. What is interesting is that BBVA is up really sharply on the back of this. We've got a press conference that is taking place currently as the management team at BBVA trying to explain what happened and why they think we're good going forward from here. But we got the early scoop on this story, courtesy of Kriti Gupta, who earlier spoke to the BBVA chair. Kriti, talk us through the explanation, the mea culpa.
Well, it's fascinating because they kind of said, we don't really know what went wrong. Remember, we spoke to them exclusively when this deal was initially taking foot. We spoke to BBVA, we spoke to Sabadell, and BBVA was confident that even with 40 to 50% of Sabadell's retail shareholder base they could win over the institutional. And that's where the miscalculation happened. That's where the mea culpa happened. We put that question to the chairman, Carlos Torres Vila, earlier in the program. He said they're still doing an analysis of what went wrong. But ultimately, what they kind of spun it forward is to say that now that a deal is not on the table, they can follow the same playbook we have seen in Europe for the last year or so, which is throw up buybacks to the stock market and see your stock rally. That's what the market is reacting to today. One, that BBVA is no longer, as a potential acquirer, going to be losing that cash, and also that it's going to be reinvested pending ECB approval right back into buybacks, dividends, and shareholder returns. And that's what this market is really excited about, at least when it comes to BBVA stock. From Banco Sabadell, it is literally the opposite problem, because Banco Sabadell has been trying to woo their shareholders with, again, the shareholder returns. Now it feels that without this takeover bid, could you start to see pressure on their bottom line that could ultimately return in some sort of pullback of those juicy returns?
So, Chrissy, BBVA's failed. UniCredit's failed twice. What does it mean for consolidation across European banking? And what does this mean for the future of the BBVA chair himself?
Well, it's not looking good, is it, Lizzy? Especially when it comes to that consolidation story. And remember, this was really framed as an early step to the idea of, if you want to get a integrated European financial market, a capital markets union, what you need to do is not only have domestic banking consolidation, but international banking consolidation. To your point, Lizzy, we saw how that ended up in Italy with UniCredit and Commerzbank. But even the domestic story, they can't quite get across the hurdles. This has turned into not just an economic and a business story, one that affects consumer lending rates in Spain, but ultimately one that is turned into a very political story out of the Catalan region. As far as it comes to the future of BBVA Chairman Carlos Torres, he says he's not going anywhere. He is committed to the role, and he has the board's kind of backing at the moment. Whether that continues, whether he faces pressure, remains to be seen. But for now, the shares responding well to what ultimately is bad news for a takeover bid that's been 17 months in the making.
Well, Chrissy, thank you so much for bringing us that news. One of the rare bits of sunshine in this market this morning. BBVA shares up more than 6%, but the rest of the market very much in the red. And one share in particular that's slumping this morning is Volvo. Those shares actually down 4.9% at the moment. The truck maker saying that it expects a trucking slowdown to extend into next year as uncertainties linked to President Trump's tariffs weigh on demand in North America. So let's bring in our Global Autos editor, Craig Trudell, for more on that story. Craig, what do you make of the Volvo truck earnings here?
You have absolutely mentioned the tariffs, which we expect in the next, potentially today or at least in the next couple of days, more clarity about exactly how truck tariffs are going to work. The Trump administration has announced that those are supposed to take effect November 1st. But we also have real concerns about demand. And we heard this from Michelin earlier this week, that the agriculture sector, just freight in general, that sort of the amount of movement going on in the U.S. is slowing. And so to hear this from one of the biggest truck makers, one of the biggest tire suppliers to those truck makers, some real consistency and sort of cause for concern for this broader sector as well.
And separately, we've heard that Trump is looking to roll back some of his auto tariffs, giving them more time to adjust. What's your reading on that? Yeah, it's a case where, honestly, the tariff picture for car makers is really messy. And there was this sort of partial bit of relief for car companies. If you make your cars in the U.S. and you are importing parts, you were able to sort of partially offset the tariffs on those parts. That was going to phase out over 2 years. What we're hearing is that it will now phase out over 5 years. So is that helpful? Yes. But it's also the case that it's not as though these companies are going to see their sort of, bill fall dramatically or a significant amount of relief for them.
Great. Thanks very much indeed. Craig Trudell on the auto sector. A little bit of stabilisation in futures right now. Anyway, we'll come back to that in just a moment. This is Bloomberg.
This is the opening trade. We're 30 minutes into today's session, and if you thought you could put your feet up and enjoy your weekend, I hate to break it to you, but it is painful out there. This is the worst session so far for the Stock 600 since early August. It's the worst session so far since early August for the banks in particular, and this comes back to those concerns about the US regional banks. It is pain across this screen, in particular for the DAX. And Guy, when you look under the hood, feels like that pain's going to be widespread.
Absolutely. Let's just bring another metric into the mix and see what we're seeing in terms of volatility. The VIX has just opened, and we've got a decent spike to the upside. We're what, 11, 12, 13% on the upside now in terms of the percentages. We're now at 28. This is a decent move, and remember, this is a ripple effect into the ability of funds to be able to carry risk. The systematic funds will be this is one of the key inputs, volatility, into their metrics and their models in terms of how they manage risk. And this will be certainly something that a lot of people will be paying attention to this morning. So at 28.21, we're up by 2.9. We're up 3 a minute ago. So you're seeing a decent move, as you have seen throughout this week, on the volatility story. So pay attention to that. That's an interesting risk input into what we're seeing with these markets right now. Let's talk about what we're getting in terms of the internals on the market this morning here in Europe, just to get an idea of what volume looks like and how that picture is developing. What we're watching there is quite significant as well. You've got a big spike in volume this morning. The market is in on this story and is watching very carefully what is going on, and as a result of which you're seeing a lot of trading going through the books right now. So we're up sharply. You've only got 23 stocks higher. Like Lizzy was bringing you some of the kind of superlatives around what we're seeing in this market. 25 stocks higher, 569 are lower on a big volume day. That tells you a lot about what is happening below the surface here. Let's talk about some highs and lows. There's some highs out there. Believe you me, there's some stocks that are worth watching on the upside. And EssilorLuxottica is a derivative of the AI trade. You go AI, you go Meta, you go into the smart glasses, and you go into EssilorLuxottica. That stock is up by 42% year to date. We hit a high back in February. We've just hit another one, smashing through that this morning, up to around 307. On the lows, there's loads of lows out there this morning that are worth watching. Interesting, not that many 52-week lows, which I think is interesting as I look through the list this morning. But Tomra is one of them. That stock down in the recycling business, down by 17% this morning, and we are dropping to a 52-week low on that stock. But there's plenty of losses out there this morning. Val, what do we need to know?
Here's what else is on our radar this morning. Growing concern in the U.S. credit market is weighing on Wall Street as 2 regional lenders disclose loan fraud losses. Shares in Zions Bancorp and Western Alliance tumbled after they said it'd been victims of fraud. The disclosures add to other recent loan blowups, including subprime auto lender Tricolor Holdings, which filed for bankruptcy last month. And Sabadell shareholders have said no to BBVA in a big blow to Chairman Carlos Torres, who spoke to Bloomberg earlier. BBVA's $19 billion offer for Banco Sabadell had been rejected by 3/4 of shareholders. BBVA shares are rallying on the news at the end of the 17-month Spanish banking takeover saga. And lastly, U.S. President is set to host Ukraine's Vladimir Zelensky after announcing a second meeting with Vladimir Putin that will take place within the next 2 weeks. News of the talks has sent European defense shares lower this morning. Guy?
Let's talk about what's happening in these markets more broadly. You are certainly seeing some significant selling in equities this morning. You've got a volatility spike that is coming through in the VIX. Where do you hide? Well, the narrative throughout all of this week, which has included London Metals Week here in the British capital, has been gold is the place that you want to be looking for an area of safety. And the momentum in the yellow metal is absolutely massive. It's having its best week since 2008. We've been talking to plenty of the main players in this market throughout this week about this rally, and this is what they've had to say.
Fundamentally, gold market is oversupplied. However, gold prices are driven by investment perception and by its safe haven status. So demand from central banks, from investors, will continue supporting the gold prices.
It's been a trade where, in particular, a lot of it is being driven by physical buying. And in particular, if you look at central banks who are going out and buying, huge quantities of this. These central banks bought 30% of the mined gold output, or at least equivalent, last year. So they're obviously looking at this as a longer-term trade that they're going to, trying to enter into.
The way we look at it is overbought at the moment, but it is still underinvested, basically. So I think nothing has changed for me. For the last $2,000 per ounce, we've been bullish, and everything that took us here is still quite bullish.
Momentum is very important here. So maybe you have some speculators riding on the journey in the interim, causing volatility like we've seen today. And maybe some of this physical leasing is part of that. But actually the trend is probably your friend in this environment. And if we are going in this direction, hopefully slowly, we don't want to crash. If we are going in this trend, then where could it go to from here? It could go a lot higher if we're actually repricing paper currency relative to real assets.
Bloomberg TV guests on the surge in the price of gold, and indeed investors are surging towards it again today. Gold up 0.3%, $4,339 a troy ounce is where we trade, because it is a risk-off mood in these markets more broadly than just in
little
commodities.
Double top in gold this morning, which I think is fun. We've had a little look at the upside a couple of times and failed on both. Is that significant? I don't know. There's a lot of momentum in this story. The momentum fades. Kind of what happens in terms of the gold narrative, which has been driven so much by that momentum over the last few days and weeks. I don't know.
Silver's down.
Yeah, so that's worth bearing in mind as well. So maybe the momentum comes out of that trade a little bit. Traditionally, past crises, you've sold gold because it's easy to sell. Do people have that same kind of story this time around? I don't know.
Well, look, it's interesting that we have seen the equity market move further into the red and gold not necessarily breach the highs from earlier this morning. So perhaps, you can draw many parallels to that. Maybe what's behind this gold trade isn't necessarily a safe haven away from overvalued U.S. equities, that it's still more about the fact we have more structural buyers than sellers. You had ETFs buying, central banks buying, amid retail buying as well.
Yeah. There's a few momentum trades that are going to be really interesting to watch.
Yeah.
And if volatility comes up, if we start to see maybe that's making the market kind of less front foot, more back foot, more risk averse, do some of those trades start to fade a little bit?
Well, speaking of momentum trades, Bitcoin is at 106. So we have reached, we're very close to breaching the lows that it hit intraday last Friday. Went all the way down to 105 during that flash crash.
So this time last week, we were talking about rare earths and trying to worry and think about kind of what was going to be the next move and how or whether or not we were going to see the rare earth story sparking another crisis between China and the United States. It's a story that has continued throughout this week. I've read lots of articles this week talking about the fact that China is unlikely to give up on what it sees as being kind of one of the winning hands in its hand right now versus the United States. One company at the centre of this story, Pensana, is developing one of the world's largest rare earth deposits, vital for EVs and so much else that we are relying on at the moment. The AI bubble certainly absolutely front and centre on this one. The firm has just announced that they are ditching plans to build a £250 million plant in the UK. I think it was up on the North Sea coast, but that is not going to happen now. Instead, that is going to be shifted to the United States. Remember, this is difficult stuff to build and permit and make happen. But the US is now very focused on this story. Paul Atherley is the founder and chairman of the company, of Pensana. Paul, great to see you on the programme. Let's talk first of all about that decision to move to the United States. Walk us through the thinking behind it.
So we're developing, as you say, one of the world's largest undeveloped rare earth deposits, and we were looking to have it processed, refined in the UK, taking advantage of a chemical park at Saltend and linked to offshore wind. The challenge we had is rare earth prices are very, very low, and it made financing difficult. So we were looking for government support, and the amount of support we got from government was really small. I mean, it was around £5 million. July this year, the US government made its intentions clear and got really serious about realigning supply chains. And it did it by putting $400 million into a company called MP Materials, which has got a project of roughly the same size as ours. Also lent them $150 million in a soft loan, and really importantly, gave them a 10-year offtake deal, priced at twice the current rare earth price. So the US government has demonstrated what is required to realign these supply chains. Yep. So we've announced a NASDAQ listing, and we're looking to position ourselves into the US.
What I'm also hearing out of that conversation, which is basically that this is now a strategic imperative, and the US is not out in front because China's out in front, but it is now figuring out what it needs to do. But the other thing you're telling me is that rare earth prices are mispriced. So why are they so mispriced?
Yes, that's right. So they're quoted in China, but not traded. So in fact, if you go and try to buy the rare earth metal price now, you'll buy them at the US price. So China prices them at about 70,000 US dollars a ton. You go to try buy that metal in China, physically buy it, it's the US price around $120,000 a ton. So the actual real pricing has been reset by the US market.
So, Paul, where China's ramping up its rare earth export controls, just walk us through how that affects your business.
So we see the rhetoric from China is a response to tariffs. So basically, China's saying we control 90% of these incredibly important magnet metals. It's a $10 billion industry that drives $15 trillion worth of business. That's the domestic, industrial, medical, military, electric vehicles, offshore wind turbines, automation, humanoid robots, the lot. China basically controls that. And so what China's saying is if you mess us around with tariffs, we'll mess you around with rare earths. In the longer term, or in the medium term, the US said, and Scott Bessent said it recently, the US is not going to play that game anymore. They're going to realign supply chains. And to do that, as I've indicated, they're putting money into companies like MP Materials and others in the US to realign those supply chains. So China no longer has this ability to quite literally turn the tap off.
And so since you've chosen not to have this plant in the UK, how would you rate Britain's resilience when it comes to rare earths? I know it's not your responsibility, but as an expert in the field, what does it look like, the landscape, to you?
So you're making a decision when you don't have a supply chain to always be on the end of the supply chain. So if you don't have rare earths, that means you can't supply your OEMs to make electric vehicles or offshore wind turbine generators or any of or humanoid robots, or you're choosing not to have a supply chain to do that. So it means ultimately the UK will have to import those finished products. What the US is saying is we don't want to do that. We want to create industry that's based on these important magnets in the US. And they make it very, very clear that by realigning the supply chains, they are driving domestic manufacture of these important goods. The UK is choosing not to. The US is choosing it wants to.
Paul, can you talk us through your thoughts on the U.S. government's direct involvement in this space? We had the Department of Defense, now Department of War, taking a stake in MP Materials. They also have done the same with Lithium Americas. When it comes to offtake agreements or agreements to buy future production, do you see that could be possibly an avenue the U.S. government could take in order to buffer up its supply chain in the U.S. alone?
Yes, absolutely. What you've just described is the US taking very, very direct action with specific companies to establish the supply chain. And our understanding is there's more in the works. We've been in Washington and been dealing with the US government for nearly 2 years now. And as I said before, they're very, very serious. They're very targeted. They know what's needed, and they're going to do it. They are going to realign supply chains to the US.
All right, that was Paul Atherley, Pensana founder and chairman, joining us for a discussion on rare earths that have been a topic of the week ever since those export controls were announced by China last week. We've heard from people around the desk this week talking about stockpiles of rare earths, just how much these tech companies who depend on them have in their back pocket if this trade war with the U.S. were to escalate. But it's very interesting to think about the U.S.'s direct involvement in some of these single names.
It needs energy. It needs a capacity as well to absorb the pollution that comes from this. But those are prices that I think the US is now willing to pay in terms of making this happen. How long does the buffer last at the moment? I don't know. ASML was indicating that its buffer was kind of not that long, like a couple of quarters.
And finite at the point.
Yeah. So at the moment, China has the ability to control the market. What we've just been hearing is that probably won't last that long, but we're still talking potentially years before it can be neutralised in terms of its ability to manage the export story around rare earths. And therefore, we've got a kind of duration mismatch between what is happening with the AI trade and what we need to make all of this happen and the defence rebuild happen. versus kind of the longer-term aspiration to make sure that actually the US is self-sufficient on that. So there's a bit of a duration mismatch here.
I will just underscore the UK point, how much of a blow this is to the UK, to lose the listing, first of all, to the NASDAQ, to lose the rare earths push when this has been going back since 2022, the jobs that would have come with it as well. I think it was Kwarteng, actually. No, one of the former UK chancellors really...
There have been many.
Yeah, I've lost track, but there's been a long-standing push for the UK government. And also, you know, when you look at the LSE, could they have offered more for the company to pick the LSE over the NASDAQ?
Well, how do you think about the markets?
It was this rare earth discussion which really tipped the markets last Friday, and we are in the red again, this time the catalyst being worries over the banking sector that leading the declines here in Europe. We are seeing the DAX underperform, down 2.2%. The wider Eurostock 600 index is down 1.6%. That would be its worst session since early August. And we are hovering near session lows in all of these equity indicators. My eye also goes over to the U.S. S&P 500 futures are down 1.3%, and we are continuing to see a Treasury rally.
So retail has bought the dip this week. Is it going to? It's been a big contributor. Institutional money has been much more cautious. This is another leg to this narrative. Does retail keep buying? Is this something that's going to spook the underlying story around this market? Certainly you're going to see some of the systematic funds with the volatility going up being obviously having to factor that into their story as well. So where does the buyer come from here? Is it retail once again? Who is going to buy the dip? Because this is a decent dip. This Friday.
You heard Madeleine Ronner earlier saying, for example, when it comes to defence, the underlying story there is a strong one, despite the peace story. So she says buy the dip when it's something like Rheinmetall. Today's a day when it's relatively cheap.
And remember, this story might not end with this session today, because we do have 4 big U.S. regional banks reporting before the bell. I am sure investors and markets are really going to be looking closely at whether they name any more exposure to First Brands, to Tricolor. Anything about their provisions for credit losses will be hotly watched with these regional banks in focus.
Buying the Swissy. Telling you that, definitely seeing that today. Euro Swissy is under significant pressure. Anyway, coming up, President Donald Trump plans to meet Vladimir Putin in a couple of weeks. It's always a couple of weeks, isn't it, to end the war in Ukraine. Today, Trump will be meeting, though, with Ukraine's Vladimir Zelensky. We'll have the latest on all of that next. It's moving defence stocks today. This is Bloomberg.
Welcome back to the opening trade. We're 50 minutes into today's cash equity session, and it is pretty ugly out there. Eurostock 600 down 1.7%, headed for its worst session since early August, all due to underperformance in the banking sector. Some jitters in those regional banking names yesterday after some disclosed some fraud regarding collateral. We're also seeing the DAX underperform this morning. That's no surprise, given banks are a heavy weight in that index, down nearly 2.2%. And an eye on the U.S. market. We're still hovering near session lows. S&P 500 index down 1.2%.
One of the big drivers to the downside here in Europe this morning is what is happening in the defence space. We have a number of significant names that we've been watching, obviously, throughout this year, throughout the last couple of years. Rise. Today, we are certainly seeing them under pressure. Rheinmetall out of Germany is down. Hensoldt, you've got BAE Systems out of the UK, and Saab all down pretty aggressively this morning. This on the back of news that we've heard over the last 24 hours that Donald Trump is going to meet for a second time in quick succession the Russian President, Vladimir Putin. We think it's going to happen in Budapest. To our call yesterday, apparently it was described as being very productive. Apparently it was Putin that made the suggestion of a second meeting. Remember, Trump is due to meet Zelensky a little bit later today, the Ukrainian President, Vladimir Zelensky, in D.C. Ros Matheson from Bloomberg joining us now to talk about this. Ros, defence stocks this morning are down sharply. The indication from that, I would conclude, is that the market is seeing a higher potential for peace coming out of, A, the Zelensky meeting, and then, by extension, maybe what we see coming out of a Putin meeting as well. Is that the right read?
Well, I would certainly caution that we've been here before. I mean, Donald Trump and Vladimir Putin have met. Donald Trump came into office saying he was going to end this war immediately. He's been in office for a while now, and this war is still going. And certainly for all the rhetoric from Vladimir Putin, no great sense is in a rush to end his war. He still has a lot of territorial and other gains there. And does he have a strong enough incentive to end it? So, you know, will this meeting achieve anything is one question. And also, you know, for the Ukrainian president, this came before his own meeting with Donald Trump, this phone call, and he will obviously want to try and reset the table a bit in his own meeting today, try and encourage Donald Trump, keep the pressure up on Russia. You know, there was a little bit of equivocation from Donald Trump in his phone call with Putin and afterward about whether he would agree to send Tomahawk missiles now to Ukraine, about whether he thinks the Senate should really push through this sanctions bill on Ukraine. So is he going to be easing back, on Russia, is he going to be easing back on Russia as a result? So for Zelensky, you know, the incentive in this meeting is to try and encourage Trump to keep the pressure up on Russia, to make sure that he's not going to make concessions in any meeting with Vladimir Putin. But there's probably a bit of disappointment, at least to say, in the Ukraine camp today to know that that meeting is probably going to happen.
Big reaction in stocks as a result of all of this. Ross, thanks for updating us. Bloomberg's Ross Matheson on the geopolitics surrounding the defence stock move that we are watching this morning. It's just one of the contributing factors, though, isn't it, into a market that is dropping pretty hard. You've got not just the defence narrative off today. They've recovered, actually, a little bit of their earlier losses, but banks are down pretty hard. You've got the tech stock unwinding a little bit as well. Tech stock story unwinding a little bit today. It's pretty broad-based. There's a lot of selling. There aren't many stocks to the upside today.
No, it's pretty broad-based, and this is all down to some credit worries. You know, our eye is going to be on some of these regional lenders who are reporting before market open, Fifth Third being one of them, who did declare some exposure to Tricolor earlier this year, along with the likes of JP Morgan. So we'll be seeing if they release anything new when it comes to their exposure. But four the decently large regional banks will be reporting before the bell.
I mean, apart from that, there's pretty much nothing else on the European calendar today to distract the market from US regional banks. So maybe these moves just continue getting worse.
But volatility is picking up. So volatility has been really low for a really long time now. So that's another market negative that we're watching here as well. The banking story is not just what they're saying about what's going on in terms of the lending to some of these more distressed private businesses that have been lending maybe into the lower quartiles of the income bracket in the United States. You're also seeing banks potentially or are using the window at the Fed more. So that's that takes me back to SVB and kind of what happened around that kind of phase. Can the Fed ring fence this quickly if there are problems? I guess is another question that we want to be asking here. Does FIT kind of what roles are we going to see for the US authorities stepping into this story?
And I think, you know, having a discussion on what this tells us broadly about the state of the U.S. economy.
Yeah.
We know Tricolor and First Brands are both exposed to the used auto sector. This one, this write-down specifically from Zion's coming from distressed commercial real estate in California. So are we going to be able to weave those two together in order to tell us a bigger story about what's going on with the U.S. economy, given the lack of data that we've had now for 3 weeks?
Yeah. Is it the canary in the coal mine?
It comes out on a Friday, though, doesn't it? Which is really annoying.
But that's a good thing, though. Markets get a weekend to think long and hard about what's going on, right?
That's a good thing, right? Yeah.
For a market break over 2 days after a slide like this, yes, that's helpful.
I'm not sure it does anybody's blood pressure any good, but it's going to be a weekend, because last weekend we got really worried about what was going to be happening, and then right at the last minute Trump goes, oh no, it's going to be fine.
Well, do you know what you can distract yourself with over the weekend? Bit of sumo wrestling in London.
Val's obsessed with this story.
She really is.
Sumo wrestling at Royal Albert
London.
Hall. It's sold out. Tickets are over 300 quid.
We've quid. I love that. So we are going to be watching the sumo wrestling this weekend as we continue to monitor.
The toilets have been reinforced, in case you were worried.
Wow, that's amazing. Reinforced toilets at the Royal Albert Hall. Sumo wrestling coming to London. Watch out for that one as you try and distract yourself from a weekend that looks like it's going to be fairly choppy as is the session ahead. Hope you enjoyed the show. Hope you had a great week. We'll see you again next week. The Pulse is up next with Francine Lacroix. This is Bloomberg.